Dr. Olowookere, and this is about the manufacturing sector. How well has that in any way contributed to inflation? Because we've had a challenge with having to revive our manufacturing sector. What is the level of production, first of all? Then, in what way has it helped to either increase it or reduce inflation?
The level of production in the manufacturing sector is increasing, but not at the level that we want it to be. We can say it's not still doing very well. Among the countries in the world that have not been able to industrialize significantly, Nigeria is one. Manufacturing and inflation. I said initially that inflation is a monetary phenomenon sometimes, and it can also be too much money chasing too few goods. So if you want to deal with inflation, you either remove money from people's hands or you increase the number of goods they produce. So if you want to reduce inflation in a country like Nigeria, on a long-term path, you still have to contribute significantly to the manufacturing sector of a country like Nigeria, because when you have more goods, then there will be fewer money, rather the other way around. So that sector, we still have a lot to do. I think the government is trying a lot of things with the Ministry of Trade, Industry and Investment, but we still have a lot to do in that area, the manufacturing especially. And most importantly, the agro-allied industry has a lot of potential, but Nigeria is yet to really benefit from the potential of these sectors.
I think fair enough, we've seen the increase of small and medium enterprises in regards to manufacturing, small companies coming up with packaging and some products and trying to increase the level of contribution to the economy. It seems that has not really helped on a large scale now in terms of having to contain the risk of rise in prices.
Yes, it has. We are yet to see the full benefit of that. I think we still need to scale up. We have a lot to do. The small and medium scale enterprises, I think I was reading something this morning that the 220 million fund is about to be disbursed. I mean, those are very good initiatives towards them.
That fund is expected to be released tomorrow.
Okay, so
by my understanding, 19th of August.
Okay, so that's one way of solving the problems, rather than always say the banks.
Well, we can't really take the banks out of the picture. Let me come to BA, because like the 220 billion naira that is expected to be disbursed, but it will have to go through the banks, BA. And of course, there's always been the issue of banks need to lend more. They have to lend more to grow the economy.
Yes, while we all agree that banks, or while we agree as a firm that the banks need to lend more as an entity or as a sector to grow the economy, we also have to look at the other side of the economy. It's not just lending, like you rightly said, funding for the SMEs. Beyond them just access or get access to funds, the SMEs are also saddled with challenges of competence in terms of managerial competencies and business acumen. So we've now seen banks like Diamond Bank and Fidelity Bank having the dedicated departments for SMEs, and it's not just lending to SMEs, but also educating SMEs in how to manage their businesses. So on the aspect of banks, I won't say the banks are doing badly, but given that the fact that they've been somewhat forced by the CBN due to the CRR policy, raising that 75%, 100% hike on public sector deposit and also private sector deposit. So that cheap funding, cheap profitability for them, it's no longer there. So they are now being forced to lend. Then let's move over to the issue of security, or so security in terms of who you're lending to. You understand? So the banks, we've now seen the banks coming out to devise ingenious means to actually identify credit-worthy businesses and individuals, and not just advance credit to anybody who comes to you. So I wouldn't harp on the banks so much. The government has a lot to do. And also, let's look at also in terms of the manufacturing sector, the recent results, the half-yearly result of most manufacturing firms. We observe that when analyze those results, we have looked at the major cost components. We see challenges in terms of distribution and distribution expenses rising even for the big players. So that's a concern. So if they are producing and they can't get out their products out to the markets at an efficient manner, so that is also
can that be linked to infrastructure deficit?
Obviously, yes. That's where yes. That's a big issue. Yes. So I think I'll let the doctor harp on that more.
That's a big issue in Nigeria. I think I was doing a review and I found out that about 20% of manufacturing costs, 20 to 40% manufacturing costs in Nigeria can be on transportation, for instance. I mean, that's big.
And the consumer will have to bear the costs?
Not really, not all.
The final consumers?
Not all.
They have to pay more.
You have to pay more, but the producer also bear part of it. I mean, their profitability has to come down.
But they transfer all of the costs.
No, it depends on
in terms of making the money, because you have to make a profit.
It depends on how important the goods are to the consumer. Both the producer and the consumer will share part of the increased cost.
Okay, very quickly, let's move on now to something that is of interest to everyone. Elections. The elections are here. They're not just in 2015. We've seen elections in some states, in Osun, we've seen Ekiti, being held, and it seems that these could be a major driver of inflation when there will be increased spending in the electionary period.
Yes, we expect that. It's one of our reasons for saying, okay, we may expect higher inflation than this. I mean, getting closer to 9% as election draws closer. Because
so the figure may rise further?
The figure may rise further.
Before the end of the year?
The figure may rise further. That's our projection, that the figure may rise further if nothing is done about it, especially when we have higher spending on an election. And definitely the CBN will have to do a lot in terms of mopping on a lot of excesses.
Could there be more tightening in that regard?
Yeah, more tightening in the area of HOMO. We see HOMO, open market operation, rather than increased MPL.
Okay, BA, there's also the issue of spending on insurgency. We've seen the president coming to the National Assembly saying that he needs certain amounts of money to be able to fund the fight against insurgents in the country. To what level is that in any way contributed to a rise in inflation?
Well, we'd like to look at that from a macro level, as in I wouldn't want to start going down to start tracing it, how it trickles down. And because I wouldn't want to start playing the game of funds that's been released or haven't been released. We all know that we need to spend, we need to equip our military, we need to fund our military to be able to tackle the insurgency in the north. And that's an additional expenditure or expenses that wasn't planned for per se. So it's not normal. We don't expect to be fighting a war all the time. Let me just that phrase, war, go down here. We don't expect to be having that all the time. So if that is an exception at this point in time, it's definitely going to affect inflationary figures. That's just it. Yes.
Okay, Dr. Olowookere, the issue of government policy, we're saying the automotive policy that has been kick-started. And the good news is that some cars have been assembled in Nigeria. How do you link that to inflation? Does it in any way have any form of link to inflationary pressures, inflationary rise?
Yes, it has. Because you want to do automotive, you have this automotive policy. You also say, okay, some cars don't have to come in, and there will be increased car prices. And
locally?
Yes, there will be. There will be. Because what we currently have is that we are saying some cars can come in, some cannot come in. The one that are produced locally can be cheaper. And
while those imported will be more expensive.
We are yet to see. That's one thing. But it has been found out that restriction doesn't work anywhere. I mean, it's a very big issue. Governments will come in, they will put in the restriction, then another government will come in and remove the restriction and put the restriction in another product.
So government policies, policy somersault.
Peugeot was here, Volkswagen were here, Michelin, Tire, Dunlop, they changed there. Quite a number of things. The fundamental issue is cost of doing business. How do we remove those things? How do we have infrastructures in place so that people can, rather than using restriction, which is a demand-side solution to the problem. So it can lead to inflation later, but now maybe government may subsidize now at the expense of some taxpayers' money, but it has to be analyzed critically. Okay. Not just we want to do it, national pride, we must do it.
We'll keep our eyes on all of this development. Thank you, gentlemen. That'll be all we can take from you at this point. Thank you so much, B.A. Peterside. He is an economic analyst, and of course from the Assets Management Department of the Financial Derivatives Company, and Afolabi Olowookere is the head of research and publication, also from the FDC. We've been talking about the Nigerian economy, the inflationary figures, inflationary pressures that we are experiencing here in Nigeria. What can be done to help reduce it, and what are those factors that have contributed to the rise in the figures. And that will be all we can bring your way as well here on Business Morning. We do appreciate your time with us. Thank you so much for watching. I am Bolaji Akinwale. News Track is up next.